Most people treat their tax refund like free money, a bonus check that disappears as quickly as it arrives. Maybe it goes toward a new phone, a vacation, or just covering bills that have been piling up. But what if that refund wasn't just a temporary relief? What if it was the seed that could grow into $100,000? Right now, millions of Americans are receiving tax refunds averaging a few $1,000s, and the difference between those who stay stuck financially and those who build real wealth often comes down to one decision: whether they consume that money or invest it. In this video, I'm going to show you how a simple tax refund, if used strategically, can compound into a six-figure asset over time, even if you're starting with just a few $1,000s. Let's start by understanding what your tax refund actually is. It's not a gift from the IRS. It's your own money that you overpaid throughout the year, essentially giving the government an interest-free loan. When you get that refund back, you're being handed a second chance to use that money wisely. And the key to turning it into $100,000 is not luck, not risky bets, and definitely not trying to get rich overnight. It's about using time, compounding, and smart allocation. The biggest mistake people make is thinking they need a huge amount of money to start investing. The truth is, consistency and strategy matter far more than the starting amount. Imagine you receive a $3,000 tax refund. If you simply spend it, its value drops to zero almost instantly. But if you invest that same $3,000 into a diversified index fund tracking something like the S&P 500, historically averaging around 8 to 10% annually, that money begins working for you. Over time, that $3,000 doesn't just grow linearly, it compounds. That means you earn returns not only on your initial investment, but also on the returns it generates. Over 20 to 25 years, that single investment can multiply several times over, potentially reaching tens of thousands of dollars. Now imagine adding to it regularly, even in small amounts. That's where things start to accelerate toward that $100,000 goal. One of the smartest moves you can make with your tax refund is to first secure your financial foundation. That means eliminating high-interest debt, especially credit cards with APRs above 20%. Paying off that kind of debt is like earning a guaranteed return because you're avoiding future interest costs. Once that's handled, the next step is to allocate your refund into tax-advantaged accounts like a Roth IRA. With a Roth IRA, your investments grow tax-free, and you won't pay taxes when you withdraw in retirement. That's a powerful tool, especially if you're thinking long-term. If you contribute your refund annually and invest it wisely, you're essentially building a tax-free wealth machine. Now let's talk about strategy. Turning a tax refund into $100,000 isn't about putting all your money into one risky stock hoping it explodes. It's about diversification and patience. A common approach is to split your investment into a mix of index funds, dividend-paying stocks, and maybe a small portion into higher growth assets. Index funds give you broad market exposure and stability. Dividend stocks provide passive income, and growth assets offer the potential for higher returns. This balanced approach reduces risk while still allowing your money to grow steadily over time. Another powerful concept to understand is dollar cost averaging. Instead of investing your entire refund at once, you can spread it out over several months. This reduces the impact of market volatility and helps you avoid the stress of trying to time the market. The reality is, even professional investors struggle to predict short-term market movements. What works consistently is staying invested and letting time do the heavy lifting. When you combine dollar cost averaging with compounding, you create a system that works regardless of short-term ups and downs. Let's bring this to life with a realistic scenario. Say you invest a $3,000 tax refund this year and continue to invest an additional $200 per month into your portfolio. Assuming an average annual return of 8%, in about 20 years, you're not just looking at your initial investment anymore. You're looking at a portfolio that could surpass $100,000. And if you increase your contributions over time as your income grows, that number can climb even higher. The key takeaway here is that your tax refund is not the entire journey, it's the starting point. Another angle that many people overlook is using their tax refund to invest in themselves. This could mean learning a high-income skill, starting a side hustle, or building a small business. In today's gig economy, opportunities are everywhere, from freelancing and digital products to e-commerce and content creation. If you use your refund to create an additional income stream, that income can then be reinvested into your portfolio, accelerating your path to $100,000. In many cases, investing in your earning potential can produce even higher returns than the stock market. It's also important to align your strategy with your personal financial goals. If you're younger and have a longer time horizon, you can afford to take on more risk for higher growth. If you're closer to retirement, your focus might shift toward preserving capital and generating income. Understanding your risk tolerance and time horizon helps you make smarter decisions and stay consistent, even when the market becomes unpredictable. One psychological shift that can change everything is viewing your tax refund not as spending money, but as investment capital. This mindset separates those who build wealth from those who stay stuck in a cycle of earning and spending. Every dollar you invest today is a future asset that has the potential to grow, compound, and work for you even while you sleep. And the earlier you start, the more powerful that compounding effect becomes. As we wrap this up, remember that turning your tax refund into $100,000 is not about a single decision. It's about building a system. It starts with making a conscious choice to invest instead of spend, followed by using smart strategies like tax-advantaged accounts, diversification, and consistent contributions. Your tax refund is more than just a check from the IRS. It's an opportunity, a starting point, and potentially the foundation of your financial future. The question is, will you treat it like extra cash, or will you use it to build something that lasts for decades?